So I'm just gonna place a few trades with y'all today. Make a few dollars. Move it around. So what we're doing, we're watching this VIX fall. And as it is falling, we are just taking advantage of this upside on the Qs. See, can we reclaim this VWAP? Make this our target. We are close, but we are losing volume. Let's close it. I'm gonna take that. Yeah, take that. Move around and wait. If they continue, they continue. If not, we are just going to sit in the green. Perfect execution. See if we get some type of pullback here or something. Figure out why I'm getting connection problems with this damn USB. Alright, that was a perfect move. See if we get some retest with this VIX as they retested that trend. I'm live somewhere, I don't know where though. Seems like I'm live on YouTube. I tried to get live on Facebook and Instagram, but it was giving me, well, I guess I am live, but I don't know. Am I live? I don't think so. Complete post details. Alright. So we are live. Facebook now as well. You guys missed out on the first trade. I'm sorry. I apologize for the technical difficulties I was having, but first trade, I'm up about $60 almost. So, let's see if we can get ourselves placed in another trade. I don't know if I'm live on Facebook. It says I am, but I don't see it. But we will see soon. I haven't been live for a while, but let's see. VIX is back popping to the upside. See if we get another pullback on this VIX. See if I can get into another contract. Qs are selling once again. As you guys know, right now we are in a summit where the environment is very volatile due to the raising of oil prices and the war in Iran, which is causing fears of inflation. It's inflation is just the rate of which price increases on all goods and services. So with that being said, there's a lower amount of spending power that the average citizen has available. With that being said, it causes fear and uncertainty in the markets just because of companies needing to do something on their books to mitigate their exposure to raising of prices on the expense side for them, which will be the loss of income to the business as revenue decreases. See, we might get another pop on the Qs. Let's grab another contract. And all that I am doing is basically trading the VIX against the Qs. So I've been requested to do a live stream of my day trade since I've been green for the last week every day. And this has been my new trading strategy. Just anytime I get a break of the trend on the VIX, basically go to the opposite direction. So right now we have this uptrend on this current pattern, on this current momentum, as they are trying to reclaim this trend. It may pull up to about the 26.44 level on the VIX, which will in turn pull the Qs down somewhere maybe close to 580, maybe 6, almost 585, 584 levels. So that's what we are watching right now. We're just trying to wait for this VIX to calm down to get a retest back up to the levels above for the Qs. So right now it looks as if we might be pulling back on this momentum to the downside, slowing down for the VIX. So I'm about to grab one, hop in. So as you see here, I'm up $8 on this position that I just opened, which is just based off of the Qs going to the upside. I got a call. So if we can break this downtrend as well, we might get a retest back up to these EMA levels. But we are just solely basing that off of the anticipation that this continues to pull back down on the VIX. So you'll see me mainly watching the VIX, but up here in the corner I'm watching the Qs as well. So I'm seeing the Qs pull up. If I look over here, I'm up 13, 14, 15, $16. But like I said, we're just basically watching this pull back. And on the inverse of that, we're watching this pull up. So that's all we're trading against the VIX with the Qs. See, can they continue to pull this down, and watch what they want to do. That is it. That is all. It's that simple. So I'm placing my trades right here on my phone because it's quicker for me to do this on the phone than going back and forth on the computer, going from page to page, trying to, get in and out of a position. So this was, in essence, the theory of what you're watching, or the explanation of what you're watching. So I'm down that same $15, $16 that I was just up as the VIX tries to reclaim this upward trend. We'll see if it gets rejected or if they break through. I'll put a stop of maybe like $40 on this trade, and I'll make it a mental stop, not even a automatic stop with this computer, because I might double down on the position if I can anticipate it pulling back further. If these levels fall to 586, I'll get a 587 call contract. Right now I'm in a 588. So I'll get a in the money contract just to make up for the downside on my position, so that as price pulls back up, that second contract can make me break even faster and then even profitable. But let's see, right now everything in the Magnificent Seven is on the reds right now. So Nvidia, Tesla, Facebook, Microsoft, Amazon, Netflix, Apple, Google. If I wanted to, I can actually watch and see what is actually causing this to move at this momentum, at this rapid pace. So let's see. Nvidia, Tesla, Meta is trying to flatten out. Microsoft is trying to flatten out. Amazon's selling off of the, the 9 or the 20? The 9 EMA, it's selling off. Netflix already sold off. Apple, it's going against the grain, so they're only down 87 cents. So 0.3%. So we have hit that 587 level for the Qs. Let's see what the VIX wants to do. It breaks this again, then we'll get another contract for the Qs. Right now I'm down $38, which isn't bad. I'm still green for the day, as you can see over here. like to be in multiple contracts to take advantage of that move. So VIX is intensifying. Like I said, it may want to go to that 26.44 level. But it's, well, as you can see, it's overbought, so it's overdone. They're more aggressive on the VIX right now for the sell-off. So let's get in 587 for anticipation of a pullback on the VIX. It tries to move back up again. I'm gonna see where it flattens out at. I might even get a 586, so that when it goes back up to 587, I'll be in a better in the money position. Let's see. Let's get it now. Where you attempt to get a better price. Here comes my daughter stomping down the stairs for no reason. It's running and I can't get in. Hurry up, get me in. Y'all made me move too much. Alright, so now we have two contracts. So we anticipate this pulling back up, so let's put a trend on this actual momentum here. Once that momentum actually slows down, we'll start curling back up again. We see the VIX attempting to flatten out. Well, may be incorrect on that move, but at some point with it being overbought, it's going to pull back. So we're just trying to get prepared for that move. Like I said, the keys may fall down to this 585 level. So it's no real concern. In essence, you really want to have no stress type trades. So let's go on this current momentum trend that they're removing. See, can we break this trend? See if they slow it down. And even this one, you'll see me make several trend lines because I'm using the actual trend as a visual representation of the speed at which they're buying, whether it's a call or a put. So we're still declining, but it's no biggie. We are already off 282 points, 187 points on the NASDAQ. See, can we get some type of bounce? But you really want to actually wait for this trend to break. But I'm getting in prematurely in anticipation of it breaking at some point. As you see, this uptrend is so aggressive, you just have some type of expectation that it won't be sustainable. So on a 15-minute, it's straight up like a rocket. And it's just fear in the morning. So let's see now. Let's attempt. Refresh this. See if the keys are starting to break out of this downtrend momentum. See if it curls back up to 587s. Watch this VIX intensify as traders get back in. Look at that, we're already back at 587. The pop was so significant. You're down only $20. I'm up $8.20 over here, down 14 here, so like $30 difference of the two. But that's why you get that second contract that's in the money to make up for the downside of the first position. I already broke that. See, can we continue to break this on the VIX? Let's see, can the NASDAQ curl back up at some point? Or will they continue to reclaim these levels up here on this VIX? See, will today be a short day for the sellers where they're just going to continue to short the market all day? Or will at some point they attempt to buy back in? I tell people all the time, like, don't be afraid of the market selling off, because every week somebody is getting their paycheck. So when they get their paychecks, basically there will be some type of contribution made to a 401k or a Roth IRA, which will then go back into the market. So this is what we are watching. Even when markets sell off, hedge funds and pension managers, they have to put those funds to work. So they have to buy the market regardless of what the market does for our long-term portfolios. So let's see, I'm only down $13 on the difference. Yep, down 11, but we're getting at 587. See, do we try to reclaim the VWAP at some point? As we continue to watch the VIX pull back, I would really like to see the VIX go for the red MACD at this point. We've reclaimed 587s. So I'm up and positive from this position. Just $3, but it's a positive. Can we continue to see this VIX pull back as the bulls step back in? Or will they continue to go to the downside? And this will tell us here if they sell off of this trend, it'll continue, but if they break it, then it may be attempting to continue with the sell-off for the morning. But like I said, you just want to have no worry trades. Once you figure out your strategy, that will build your confidence in your trading careers. They're standing above it right now, but we'll see what happens. I'm up $20 on both. Let's see, can we make any real advance here, or what they're going to do with this VIX? Looks like they might try to stand on it, but we'll just give it a shot and see what happens. Look like they're going to try to stand on it. See that volume increasing on the sales, but it's still not above the previous buying volume levels. So we'll see. See if we can get another break on this uptrend that they're trying to build for the VIX again. But this is all we're doing. Like they can't hold those 587 levels. Yeah, it looks like they can't. Either way, we're watching this fix is still overbought, so they are retesting these lows again on the Qs. As you can see here. Excuse me. Stop. Motherfucker. Let's see. This is a double bottom. And we break this trend again on the VIX. In most cases, I would have bought an additional 586 contract, but it's still early in the trading session. We don't know how fast they're going to try to move up to this 2642 level. If we break this again, I might get an additional contract in anticipation of the MACD going red on the VIX, continuing their downturn and their attempt to rebound for the Qs. Looks like they might want to stand on this. Let's see what's going on. Meta is down 2%. They're still curling. Tesla's down 2%. They're flattening out. Nvidia is down 1/3%. They're flattening out. Microsoft is down 1/3, but it's rebounding. So those 2, 3, 4, and including Google. Let's see, it's flattening out. Yep. It's standing up on this fix currently. They pulled it up so significant there. Let's see if we can get another 586. It being overbought. This may be one of my last positions that I opened. So we're gonna wait for this one. I'm literally gonna wait for the break of these trends. Let's see. And that might even be even better to get a 585, because if this pulls all the way back to 587, those 585s will be deeper in the money. No worry trades are what you want to make. So we're sitting on this trend line. It's going to get a pop to this 2644. But it's important that you guys are familiar with key levels. This 585 is expensive. I'm gonna let the price fall some. It's So expensive right now. If I get an additional 586, that would be reasonable. Look, we broke it. 585. Let's see here. I think I'll just go ahead and get ready for it. See, can the price fall a little bit more? That might be it. So I'm just get in now. Excuse me. We're now 300 points for the NASDAQ. And this is basically because oil is up. See the key levels in oil. Oil might, it's retesting pre-market levels, pre-market highs for the oil trade. So as oil goes up, fear goes up. Let's see here at the 585s. VIX is below this momentum. 586s pulling back up, retesting these levels. See, can we get a swoosh back up? Can we get a swish back down for the VIX? Let's watch simultaneously. Let's put these up side by side. So this is what we're going to do here. Pull the VIX right beside the Qs and see. So you see as the VIX is going up, you see the Qs are going down, but as the VIX is pulling back, the Qs are pulling up. Let's see what happens. No worry trades, which you, like I said, is what you want to get set up in. I'm only down $11. You see how this is making up for these differences? Let's see, can we walk away with something? See, can they reclaim this 20 EMA? Try to pull that 9 EMA above it. And retest VWAP, which is all the way up here at 588, but we probably won't be in the trade that long. Pull oil up so I can see it, watch it. It's all the way down here. Because this is the catalyst that is driving the markets. Till we get some type of agreement with oil prices, we're going to experience this up and down trade environment for some time. This VIX wants to curl back up. They're keeping this damn VIX up here, overbought desperately. Let's put this trend line on this VIX. See what it wants to do. Today is Friday, so you want to be aware of that as well. Fridays are typically the worst days to trade because that's where you get a low volume trading day. That's hedge funds and big account managers leave early to start their weekends. VIX wants to reclaim this 2644 level. This oil continues to push higher, breaking out of pre-market low highs, which is thus also causing the market to sell off like it is right now. Throughout the day, we will get some either rejection or acceptance of price for oil, which will stabilize the markets. But right now, we're not seeing it. The VIX is flatlining right now. And call that capitulation or consolidation. So as VIX becomes stable, you'll see the market attempt to rally back up. And we are so low below the VWAP at some point. We will attempt to retest these levels as this continues to curl down, though we don't know at what point we may retouch the VWAP. So VWAP, I'm a counter trend trader. But once again, RSI is overbought. And as well, you're seeing divergence. So as you see the MACD, the levels, the peaks, as every time it becomes overbought, they're going lower and lower down here. But up here, the levels of the VIX is curling. It's going higher and higher. When you see two things doing the opposite of each other, that's called divergence. So they are losing the volume at which they are consistently pulling the price up here because it's becoming lesser confident that this is going to be sustained. And so you get a few individual traders or people out there that are pushing this up to these levels for their own purpose, just to either trap traders or attempt to get liquidity out of the market. So at some point we can expect a wash on the VIX because the divergence will at some point need to be in agreement. Well, you'll get both the MACD or the RSI. As well, you see the MACD levels are declining. So this is on a downtrend, but this is, like I said, on an uptrend. So at some point, this will match up with these visualizations down here. What you're visualizing. You're breaking this trend again. Hopefully we can wash back out for the VIX, which will then cause a rally attempt for the Qs to commence. And hopefully continue into pulling the MACDs down into the red levels. This is one of those set it and forget it type trades, but because of the way oil is, you see oil rejected the pre-market highs. It tried twice and it rejected it twice. So hopefully that is a sign that oil is going to continue to sell off and allow speculators in the market to begin to buy the market again. Hopefully this VIX loses this key level. Question is, at what point though what time in the day will we see that? You see the EMA starting to curl out as price attempts to find some type of acceptance of the 586 levels. The averages are becoming together. Hopefully this 9 can break this 20 and start curling back up. See, we're losing this key level up here with the VIX as oil continues to sell off. So let the shorts begin to get placed on oil prices. But this damn VIX wants to hold this 2644 level. It's fighting so damn desperately. We are retesting these lows once again on the Qs. As we come down, we're just looking for some acceptance of price and some rejection on the VIX. Once we get acceptance, the market will attempt to buy back in as we see the MACD on the VIX continue to pull back. My phone just goes bonkers in the morning. This damn VIX just doesn't want to die. All it takes is for one trade. One trade and you're done for the day, which should have been my first trade, but because I didn't set multiple contracts, I wasn't satisfied with that trade, which I should have been. Selling my hands for the remainder of the morning session, but this is the New York session. Excuse me. All you can do is wait. Okay. See, can we continue this rally? Or are they going to reject it? This is the first time. Well, I'm not even going to say that because we still got 30 seconds left, but this will be the first time that we close above the 20. Hopefully that's a good sign as you see the MACD attempting to sell off on the VIX. Getting aggressive buyers buying back in. We're down $20. Got the volume increasing as well on the buying side as the VIX re-loses this key level again. Hopefully that's for good. Got the MACD red here. Hopefully that's a great sign this time that we keep this buying momentum. But that quick, you see the sales volume has increased to damn near meet the buying volume, but the buyers are still stepping in. Hopefully this continues to the upside. The volume is capsized, that volume there. Seller stepped in big that time. Hopefully that's not sign of a washout. Looks like these buyers are stepping back in. They don't want me to go profitable for anything. Since it go down $7. Yep, finally. See, can we consistently stay green? Let's see what you guys want to do with this. Yeah, really increasing volume. Data's kicking in as well. I have to call you back. Let me see what he wants because I'm not live on the phone. What's the word, cousin?
Charlie, you ain't playing your motherfucking cheetah friend, huh?
Hell yeah. Shit.
They talking about you thought you was Pootie Tang in that motherfucker.
Oh, God. Take the bet off whipping motherfuckers. Shit, you on your way to the inspection?
No, I'm outside of my shit right now.
Okay. Shit, I'm
He out there talking to the inspection guy.
okay. Shit, I'm gonna call you in a minute when I get off live. I'm up here trading live.
Alright, bet, blood.
Alright, cousin. Alright. They really don't want me to make profit right now. They're really changing these prices on these contracts right now. Damn market makers. Can't beat them. And in essence, I should be up something significant right now. They are really Really fighting us right now. Like, am I down $16? I should be up damn near $100 plus by now. Can't make this shit up, people. This is why you hate contracts, because market makers do everything they can to make it where you don't walk away with anything. At some point, it becomes asinine. 587s. I might have to close this because they really don't want my P&L to be green. I'm up literally only $2, and you see this massive rally attempt. I should be up damn near 100 plus bucks by now. Can't make this shit up. Let's start closing out just because they are fighting price levels. Just walk away while we're in the green. Come on, how the fuck are you doing? This is taking so damn long. But we're just gonna sell while we're green, just because they are really adjusting prices on the contracts, which is so fucking illegal. We made money on that trade, but as well as you see, we're retesting this level. So it's like, alright, we're gonna get out now while we're green before they bring us back down, and then we look up, we're down damn near $200 because of the changes in the fucking prices of the contracts. But this is why I wish I had a portfolio where I had damn near 100,000 to just buy the actual shares, because then you're just trading based off the changes of the price and not the price of the fucking contracts. So later this year, that is the goal, because what you have to factor in is that you're trading. See how I got out right on time? What you have to factor in is that you're trading two separate markets simultaneously. You're trading the securities, the equities market, and you're trading the options market at the same time. And those are set in two different worlds, where price is subject to the discretion of its individual market. So, although it says if the price moves a point, which will be one variable attached, which we call theta, the longer you hold the contract, the more that contract is going to cost to hold. So just that purchase of that contract will cause you to lose the value of that contract, because it's in theory a coupon. The coupon is just saying that if you pay for it, you're going to lock in a price for a certain point. So as you see, we got out perfectly, right? But this is where there's a science and an art to trading, because the typical trader would have held the position in anticipation that it would have continued up, but in this market, you don't have that much time to sit to the side and wait and see price rebound again to get back up to these levels, because even back up to these levels, your contracts won't be the same price because of gamma. Gamma takes away from the delta. The more that the price moves away from the delta, or the strike price, which is what this will be, if you bought a contract for 585 or 586 or 587, which I had, every additional dollar that the price falls below, the gamma is going to take away from the delta. So let's see here if I can pull up some option contracts. Let's see here. Qs. So 0D means 0 days to expiration, meaning that these contracts expire today. Trying to pull this up, it's not letting me. Yeah. Is this locked or something? I need to pull these up. Auto scale, we can't change that. Let's see if this will allow me to pull this up or down. Nope. Is there a way to make this pop out? No, it's not. So, I want to make this bigger, but let's pull this up somehow. I want to see all of this, but I can't. Let's go somewhere that we might be able to see it. Let's see. Who can I go to? Bar chart might have options, or even let's see. Who can I pull up? Yahoo Finance, maybe. Let's see if they give us the option quotes. That's all that I'm looking for. And the same instrument, the Qs. Listening to my daughter. There go options. So let's do some option course, options 101. And we're going to be done trading as well today. We're going to sit on our little $60 profit. Yesterday I made $320. The day before that I made $380. The day before that I made $75. No, I made like $15. The day before that I made $75. So I'm gonna keep this 60 and call it a day. But let's see today. Let me strike prices. 5. I don't know why they have all of these options available. Looking for the 586s. So the blues mean that they're in the money. The whites mean they're out of the money, meaning that the prices below or above what the security is trading for. So security or the equity is trading at 586.42. Anything below 586 is in the money, because this contract means that you can buy 100 shares of these Qs for these prices of 586, 585, 584. That's what the coupon stands for. If I give you this coupon, that gives me the right to buy 100 shares of any equity at this price. So it's a premium, which we call the price to purchase the contract, is sitting at a in the money value, meaning for me it's a profit, because I am in essence buying the price at a discount compared to what it's selling for. Now let's see, how do we move this over? And then they should actually be able to show you like a column up here that will show you what these numbers mean, but for some fucking reason you're not seeing it. So thank you, Yahoo. This should have actually scrolled with the fucking contract. but it's not. And as well, they're not showing the deltas and all that other shit. Let's go back over here and see if we can find what I'm looking for. See this 586, and I can't even move this shit out the way to see the shit. Like, come on, Robinhood. Let's see Trading View. I mean, Webull. When you're trying to show something, everything wants to be a pain and a hassle for no fucking reason. Like, why does things have to be so fucking difficult? Bitch, come on. What the fuck are you doing? Show me what the fuck I'm trying to show. Guys are doing too much. No fucking reason. Bitch, I'm signed in, so take me where I'm trying to go. Why is this homepage still showing? Should have just taken me to. They want me to actually download the fucking desktop as app for no fucking reason. Like, I don't need to see all that shit. Like, why do you have to complicate things? Where are my downloads? Downloads should have. Fuck are y'all doing? Y'all just showing, like, come on. It's not that fucking hard. Damn. Gosh, damn. Everything wants to be difficult for no reason. And I refuse to transfer funds because I keep like maybe $1,200 available to just to trade. That way I don't go crazy. You know, you put 5,000 in, you'll look up and see yourself in position sizes that are unmanageable. So keeping yourself at a certain operating expense, you treat trading like a business. Although you have so much available to spend, you don't spend it all. You don't make all of that available to be used because then you're going to use it for no reason. So bear with me, guys, as I install this BS. And I should have actually had it available already, but we're just going to reinstall it. I use Robinhood for my options trading because it's easier to get in and out of on the phone. Quick push of a button, and they have a friendlier user interface. Okay. Bear with me. Let's see what the market is doing in the back end as well. Oil is reclaimed at 120, so market may continue to sell off. That's why another reason we were getting out. But back to the original reason why I sold those contracts. I sold those contracts because I saw that as the price was pushing up, I wasn't significantly on the money. So that is like a sign or a tell, as they say, a telltale of what the price of what the market is doing. They're anticipating the price to pull back again because the people that are creating the contracts, they are decreasing the value of those contracts because they are making them worth less as well. And as they become worth less, you then expect the price to follow what their prospective anticipation is showing. Sign in. I have the platform pulled up, but I have to add it to OBS so that you can see it in the background. Give me 1 second. Add it as a source, what you're seeing. Where is it? It's here, but it's not showing. Difficulties. Okay. So now you guys can see the option chain. So let's see. So we got once again, this is the options chain. This is just all of the contracts. These are the calls. These are the puts. Open this up so you can see. Move this shit over. So these columns here are what we're watching. So these are what I was talking about, the deltas, the gammas, the thetas. So these deltas here are showing you as the price pushes up one additional dollar, that contract is going to go up $54. If the price falls $1, that contract is going to fall $54. So we watched the Qs go from 585.30 to 587.30, so $2. So those contracts should have in essence went up $108. But because of this fucking gamma and this theta, that did not get reflected in my position. So we had the 585s, 586s, and the 587s. At the time when the price was 587, these deltas should have been basically in the 50s, and my 585 should have been in the 65s or even in 70 ranges because all three of those were in the money. So that should have went up $56 for the 587s. The 586s should have went up $65, and the 585s should have went up $72. That you're paying for each additional day that you hold that contract. These contracts expire today, so that's what the 0D means. It means that 0 days left to expiration. So as the day continues to move to the close of the market, those contracts lose their price throughout the day. Let's pull these over. Let's pull these over. the deltas, the thetas, the gammas over to what the bid and the ask prices are. Slide these columns over so that we can see it all together. So the bid and the ask is what the contract costs. So one contract at the time was worth $253. One was worth $318. One was worth $388. So that position that I was in was basically about $900 plus. I was just in for all three of those contracts that you was watching me trade. You can see the prices change as the price goes up. This side is basically if the price falls, these contracts should go up based off of the delta gammas on the thetas again. So now those 586s, you see how this keeps going up and down. Every time this goes over 586, this will come up here. But when it's below it, it'll drop down there. So that's what you're watching change over there. But you're seeing the prices of the contracts go up and down. So as this is moving, this should have been up significantly. All three of these should have been up significantly. These two right here should have been broke even at the point, and this one, which was $2 above, should have brought me up plus $100 plus at the time. But because of theta, this on the back end was eating up this, and as well the volume, which they don't have up here. Let's see, can we put volume? There we go. So volume, let's pull this over. This is just the amount of contracts that are bought and sold. Come on now, slide, slippery slide. Pull this over in between delta. So the number of contracts that were bought today were 17,000, almost 18,000, almost 4,000, almost 1,500 contracts for each of those respective. I was in the 587s, which had 60,000, almost 61,000 bought. The 586s had 40, almost 2,000. It was lesser than, and the 585s probably was maybe, who knows, 14,000. I don't know. Excuse me. But just because this is moving and you can anticipate these contracts being bought, but like I said, it's an additional market. They're trading on their own. No one has to buy these contracts just because they see the price move. So what that does is it makes the price stall as this is moving in your favor because nobody is buying the contracts. And so that could have been a factor into why the price wasn't going up as reflective to what we sort of saw when this popped back up over 587. Because these 40 some thousand contracts are bought by retail investors, by institutions as well. So the institutions are really the ones who are creating these contracts to hedge for their positions that they are holding for their respective clients and their respective portfolios that they are managing. These are also the same individuals that are holding the amount of shares that are necessary to actually be able to create these contracts. So what I mean by that is I'm just reading comments from my boy Jeff. Anything I could have done differently, just trade the actual stock itself, because the prices are not as reflective of what the stock is showing. And that is what I'm explaining right now. The individuals that have all of the $1 billion accounts to create the up and down swings in the market are the same players that you're playing against. You are not sitting on the same sides of the table with the market makers. Their goal is to increase their P&L, which is their profit and loss um, statement, I guess you can say. They want to show that for the year they made 20% in comparison to the market, bringing in 8%. Their goal is to always outdo the market. And that is their incentive to get new clients on the back end. You see prices pushed all the way back up to 587. Why aren't these contracts up to $200, $300, $400? As you see now that these damn contract prices have fallen from where they were. At one point, the third contract was $400. This was $300. This was $260. You guys just witnessed that. But that is what you are seeing and you are experiencing as the day moves on, as this data eats up the price of the contract. So you are seeing it firsthand, hand in hand. As this goes up, it's a counterproductive system. This takes away from that. So the move has to be significant where this price flashes because they can't control it anymore because the price has rebounded and tested levels that they didn't foresee, causing them to lose money because people then begin to either exercise their contract options, their contract rights, or basically people are just running into the contracts. They're buying them and selling them in the market because they are making profit for the day. And as they sell those contracts, the more contracts that they sell, the lesser the price becomes because they are flooding the market with a supply of those contracts. So they're closing their positions at market. And what that does is it buys up all of the open um, positions that people have placed to get in, and they are first out type of system where everybody's just jumping out. They're running. Now look at this. Why is this back at 265 when this should have been how this was right here? This was like 270 or something like that. Look, you see how this third one that was now 402. When in essence, when the price shot up, that third one was only as 300. So why isn't this jumping as much as that? You should see this jump to 400. This should be 380. This should be 260. But when this falls, this one's going to be 206, 263 something. So you're not seeing what you would anticipate this actually jumping to. And then it's just because of these variables, the gamma, the theta, and the damn delta is being um, affected. The delta gets affected by gamma because every time the price goes below what the strike price is, these numbers in the middle, this is how much this delta will change. So if the price falls one additional dollar, this $74 is going to fall $7. So you'll see the difference between $74 and $67 as being 7. So from 67 to 58, you're going to see a difference of 8. From 57 to 48, you're going to see a difference of basically 9. You're going to see a difference between 48 to 39. You see how this is respectively changing what this is. And this gamma changes as well by the vega. So as the price goes up and down, you're going to start seeing this gamma actually change. So when the price does go back up, this delta won't be 57 again. This delta will probably be like 55. So you won't see the expected, look at this, 52 now. You're not going to see that expected delta because it's not a constant variable. You're playing against all of these statistics as this is trading. It would be so much easier and manageable if you were just trading on this variable alone. But because you have to factor in these variables, it makes it a very complicated system that you are fighting against. Even if your prediction is correct, as we just saw in my position, you won't see that expected return because of this. How did this just go from 55 to 52 back to 54? That should be a constant variable. Oh, my damn phone just be going off all day, and that shit just bugs you when you got all this other stuff going on. But the goal here is to build a portfolio large enough that I can trade 100 shares of anything, or 1,000 shares of anything, or 10,000 or 100,000 shares of anything, and you will see daily P&Ls of me making 6, 7, 800 to multiple grands per day just off of playing the actual price of the actual equity itself. Because we've mastered that. We know that. We know what the market does, how it moves, what causes it to move, the catalysts that are involved in factoring in the changes in the price and the volume as well. But what we can't master is this here. So this is what causes a lot of investors, traders, speculative traders to lose a lot of their funds just because of these. Even if I changed it to from a 0-day to a 3-day contract, which expires Monday, you're going to see the same scenarios occurring. The only difference is that you have more days to hold those contracts, which in turn makes the theta worth less. So you're losing $47 each additional day that you hold this contract. For a 4-day, you're looking at a $62 difference. For this one, a $63 difference, which is only 1 day of the change. I see 7 days away. You're going to see a $59 day, $59 per day. What you really want to trade is contracts that are basically 56 days out, 42 days out, because these thetas are so much smaller. So for each day, you're only going to lose $21. But in relation to that, the contracts are that much more expensive. So this is a $3,100 contract. So for $3,100, you got 2 months to hold that contract in anticipation that the price moves in your favor, which you got a hell of a lot of wiggle room to see occur. But you still have to predict the direction to make profits. So maybe if I had a $30,000-$40,000 account size, then I could trade 5 or 10 of those contracts to see better returns. My damn heat just kicked on, so you're going to get a lot of that air in the microphone because the vent is over my head. Let me change that. Let me change the direction of it real fast. Close that. But that's what you're up against. You're up against market makers doing whatever the hell they want to do. Things that we can't change. Let me see how many contracts I want to see. Let's put 6 so that this is close to the equity price. So, do we want to make one more trade for the day? I don't know. I don't want to risk losing anything. Yeah. I think we're going to stop while we're ahead. Close it up here. Then it's live streaming for the last hour and a half. Seems that my camera is frozen. Hold on. Okay, we got movement again with the camera for you guys. But that may be it for us for the day. That may be it for the day for us. May jump back on a little later, but In the meantime and in between time, you guys saw my second trade. You didn't see the first trade. First trade is where I made the lump sum of my position and my profits for the day, which I should have doubled to tripled that position size, because then that would have been 180 for the day. But back to you, Jeff. What I could have done differently, I could have taken larger position sizes. But you want to manage risk, so to be able to do that, you want to keep a mitigation to your position size, because if market moves against you, those effects are massive. But if it goes in your favor in return, those returns will be massive as well. So that is that. Show the market one more time before we close up this live stream. So we see that the Qs still bouncing off of these lows for the day. They're trapped in between both lows. They're retesting the previous lows, bouncing off, and we're still seeing the VIX try to pull back, sell off as oil continues to rally higher, but the oil is attempting to curl and pull back down as well. So we might see the market continue to push higher, but we won't see that until we get a massive sell-off. But yeah, we've been green every day this week. That's all we can hope for and shoot for. Just continuing your journey to be a profitable trader. You hear people all the time talking about nobody is making money in this summit, in this climate of the economic change that we're seeing, but I'm proof that's not the actual narrative out here. And that's just because timing is key. People want to try to hold positions too long, and you start getting signs that it's time to get out. Follow them. Get out. Don't try to hold a position because you predicted to do something that may not occur. When you're green, stay green. If you're red, don't further the red. Stay out. People lose a lot of money trying to make back their losses, and it only intensifies. So, with that being said, I'm bakerdeshun. I may try to go live again next week. I haven't been live in a few months, only because I've been doing some things in my private life that have not allowed me to sit in front of the camera. And today I felt it would be a good day just to get on here and show how I've changed my trading strategy just based on the current condition in the market. So once again, we're just trading the Qs in relation to the VIX. As you see the trend change in the VIX, you do the opposite for the Qs or even the S&P, and you ride the wave. Take your greens while you're green and move around. Don't stay in too long, because at any point in time throughout the day, you could get some news headline that shows that there's been some new escalated impact in the Iranian war and the price of oil. You know, just how that can affect inflation. As we know, as oil goes up, so does everything. Oil is in plastic, oil is in petroleum, is in diesel, it's in our shoes that we wear, it's in everything. But it's really based on the cost of transportation that we are anticipating inflation to spike. Because as you see, like all of my vehicles are premium. They take premium fuel. So right now at the pump, it's like $5.50, $5.60, $5 almost 70 cents per gallon. Put in $25, you're getting less than 4.5 gallons. You know, once upon a time you put 25 in, you're getting 5 gallons. I haven't seen premium go below $5 in shit a year. It was down to like 4.49, and that was the lowest that it was going. It wasn't going any lower. So within a month and a half, it spiked back up $1 to 5.50. And Iran says that shit. They're trying to make oil prices go up to $200 a barrel. With that being said, gas could go up to 7 to 8 to 9, almost $10 a gallon. But that's why every day you see Trump saying something about trying to get our reserves, increased in whatever the oil reserves are holding, just to get that supply out there for the world to keep prices sustained. But until we get other countries on board with us, we won't really see that impact in the oil. And as they continue to bomb refineries and other oil holdings, we're going to see prices continue to spike as this escalation of war continues. And we are just in the cusp of the beginning of the war. We don't know what the expectation is and what they anticipated being over. This could be a war that lasts for years, because this has been a war that's been brewing for years. They've been, talking about speculations of the Israel Palestinians, the Iranians for decades, coming to feud. And look at that pullback in the Qs, that massive sell-off. You can't anticipate those swings. Those swings are so massive up and down because you got both sides trying to make money. And you don't want to be a person that's trapped because your option contract is not reflective of what that is doing. So these are the things that we're up against. I wish, once again, I had enough funds to buy several thousand of these Qs as we see them attempt to spike back up to the 587s. A dollar for 1,000 shares is $1,000 in a move. We would have made several thousand today. That's a $586,000 position I would have had to make, but if I had it, it wouldn't be nothing. It'd be peanuts. But that will sustain your lifestyle. That's what you want to do. You want to be able to create a stream of income and increase your wealth, your holdings, your discretionary income. You want that capacity to be maximized, if at all possible. So, for all my invested traders out there, investors out there, chat with me offline, DM me, we can talk offline. I trade every day when I'm at work, but I trade from my phone, as you see here. So you'll get recaps of some of my trades throughout the week that I'll record on my screen and then put the video together and then post it, which will then be a later recap of what I did throughout that day. But only when I'm live will you actually be able to see me make a live trade. So I once again want to apologize that you guys couldn't see the first trade, because I was having difficulties getting online because I wasn't properly prepared, I guess. I didn't have certain descriptions set up that they needed to go live on, like, Facebook. I'm live on YouTube, Twitch, Instagram, but different platforms want you to put different information in before they actually allow you to go live. They just don't want to post a video with nothing explaining what is going on. So let's see, as the VIX attempts to recurl back up to this 2644 level. And we might get a washout for the Qs down to this 582 today if they can't hold these lows and this oil continues to try to rally. Looks like oil is pulling back momentarily, so hopefully we get a sell-off, which then will cause the Qs to rally. So that's what we saw yesterday at the end of the day, where you see this spike here, oil sold off, and as oil sold off, the NASDAQ spiked. So let's pull the oil up here. So this was yesterday. As you saw oil sell off from 122 down to 116. Then this is where you saw the Qs, the NASDAQ spike back up to retest pre-market highs. They broke above them and then they closed right below them. But they were still in this expansion candlestick at the close of the day. So we watched the market bounce off 588s all the way up to 595, almost 596, as they tried to test this key level up here at 587, 597. So without further ado, once again, I'm bakerdeshun, and thank you guys for your time. Signing out. Bye.